How's it going, everyone? It's Sam. Today we are talking about why Ethereum is falling so much and why so many people are worried that we're going to have something very similar to what happened with Luna happen with Ethereum. Now, I'm going to explain my thoughts on it, also talk to you about the real risk that's going on right now. If you don't mind hitting the like button and subscribe button, I appreciate that. Just keep in mind that this has implications for everything else in the market besides probably Bitcoin, right? Ethereum leads DeFi, everything else lags Ethereum and Bitcoin. So if Ethereum falls, it's going to probably hurt the entire market besides Bitcoin. So stay through to the end. If you don't mind hitting the like button and subscribe button, I appreciate that. There's also a link down there to ftx.us. I would highly suggest trying this out for a variety of reasons. They have really cheap fees, cheaper than almost all the competitors. They have NFTs where you don't have to pay the gas fees. They're going to bring stocks here soon and you can invest in them straight from stablecoin. So imagine being able to go in the future from some kind of DeFi program or DeFi app all the way over to stocks and just being able to arbitrage so easily in that way instead of going through your bank account every single time. And their founder is going to give away a majority of his wealth over time. So definitely check out the link underneath the video. I would highly suggest trying it out. It's one of my favorite crypto apps. Now, you can see crypto has fallen a lot over the last 24 hours. Not surprising because the stock market fell yesterday. But you can see that Bitcoin is falling only about 3.7%, while Ethereum's down 10%, BNB's down 5%, Cardano's down 4.5%, XRP's down 5.5%. You can see Ethereum is doing much worse than a lot of the other altcoins, surprisingly. You can see too that Bitcoin dominance is going up. We're at 48%. That's why I've been saying over the last few months, really over the last, 4 or 5 months, them only buying Bitcoin in the cryptocurrency market. I had bought just enough Ethereum to buy an NFT 3 or 4 months ago, but I'm really just adding to my Bitcoin stack and deploying slowly over time into the market because overall, I think we could see the dominance continue to creep up. Now, some people are very worried right now. Obviously, we all know what happened with Luna, with Terra, with UST. It was horrible. The depegging happened and it caused $50 billion to drop out of nowhere, or $50 billion to be burned. Now, a lot of people are worried that we're going to see something similar to that with Ethereum, with Lido staked ETH. So you can see here the price is about $14.93. It's usually pegged 1-to-1 with Ethereum. However, it's fallen off its peg. Ethereum's $15.57. It is only about $14.93. Max Kaiser saying, scam alert, this is heading to zero. Obviously, he's a Bitcoin maxi, not really interested in anything else crypto. You can also see Lark Davis is removing some of his Ethereum and STETH from Instadap and actually realizing a loss. You can also see that he's still holding a portion of Ethereum and STETH, but he says a short-term depeg from ETH does not change the value of ETH 2.0 unlock. So you can see a lot of people are starting to take action with their ETH and with their STETH. Some of them are really worried about this depegging. Now I want to provide some light on this. I wanted to talk about it a second because I think there is a lot of fear in the market, and obviously it's causing some unwind, some big price decreases in Ethereum and some of these other altcoins as well. So this is a really good thread that I think we should go through. It's going to explain it better than I could. So seeing a lot of misconceptions and confusion around STETH, Lido Finance, liquid staked Ether, thought I'd write a short thread on my perspective. STETH is a fully collateralized representation of Ethereum staked on Ethereum POS beacon chain. 1 STETH equals 1 staked ETH. When withdrawals are enabled on beacon chain, 1 STETH can be removed for 1 Ethereum. Any comparisons to an under-collateralized stablecoin like UST are misguided. So you can see they're fully collateralized as opposed to UST, which only had a few $1 billion worth of Bitcoin backing, a few $1 billion worth of collateral, and they were worth 18 or 20 billion at the time. So barely any collateral. I think any comparisons to STETH and GBTC are also misguided as well. STETH is an ERC20 token that has utility within a growing DeFi economy. It also has a native yield attached to it that you cannot get by having liquid ETH alone. There are many who will carry the risk. STETH doesn't have a target peg. It continues to be collateralized regardless of what the secondary market values it at. Being able to exchange your STETH on the secondary market for Ethereum is simple and convenient, but you'll get what the market values it at. Generally, STETH won't trade at a value above 1 ETH as long as its deposits are uncapped. This is because of arbitrage. If it trades at 1.05 ETH, I can deposit 1 ETH to Lido, get 1 STETH, sell it on the secondary market at 1.05 ETH, profit 0.05 ETH, and push the price of STETH down. And you might recognize that because that seems similar to what was happening with UST. Currently, the arbitrage only works in one direction. It can't be redeemed yet, but once it can, reverse arbitrage is simple. If STETH trades at 0.95 Ethereum, if I buy 1 STETH for 0.95 Ethereum, then redeem it for 1 ETH for a profit of 0.05 ETH and pushing the price of STETH up. Now let's take a break here. There is something that's coming up that can cause ETH to fall pretty dramatically, so we'll get into that. Important to note that withdrawals of ETH from the Beacon chain will not be enabled once the merge happens. It will be a hard fork 6 to 12 months later after the merge, hence STETH may not be redeemable for a while. Also, there is a withdrawal queue on the Beacon chain. There's various reasons STETH may be temporarily trading above or below its collateral value. We list some of them here. That last one is what most of the current FUD is around. STETH is an ERC token which can be used in the DeFi system as collateral. People have deposited STETH as collateral on Aave, borrowed ETH, deposited into Lido for STETH, and repeated. So people are basically leveraging up, and this is what some people were doing with Anchor, right? They're depositing, withdrawing, depositing back in, and they were looping. This is something that's quite dangerous, and you can see that there have been liquidations, a significant amount of liquidations from Ethereum over the last 24 hours. That's what's leading the pack. That's not something that we normally see, is that we have 3 times as much money in liquidations and forced leverage liquidations as Bitcoin, right? This is quite surprising, but not too surprising because we know what's going on here. So people have deposited their STETH as collateral on Aave, borrowed ETH, deposited into Lido for STETH, and repeated. Thus, if people continue to sell STETH on the secondary market, there may be a liquidation cascade from these leverage positions being flushed out. Larger market makers, manipulators already have exited, but some still remain. Celsius may not be running into liquidity issues, but they hold a significant amount of STETH, which is being used as collateral to borrow stablecoins. If sold, this would definitely cause STETH's secondary market value to decrease, at least temporarily. The flip side to all this is that regardless of how much the secondary market values STETH is still backed 1-to-1 with Ethereum. Now, I think that's the really important thing to remember, that it is backed 1-to-1. So I have never bought STETH, I've never used Aave, but supposedly it is backed 1-to-1. Now, they also go through an arbitrage opportunity showing basically if STETH is trading at such a discounted value, you can get more of an APR with staking and with STETH. So some people are going to do this, some people aren't going to want to take that bet, right? At this point, though, it seems like we're going to get through this, and this won't be the next Luna 2.0, but in a way it kind of is, because people are going to get flushed out from leveraged and looped positions. And I think you have to be careful about this, right? Because in crypto, if you start looping, there's so much risk, and that's again just where you deposit to withdraw or borrow and then deposit again and just make it so that it's basically on leverage. Now, all this is happening, and I think some of it is the actual problem, right? Some of the reason that Ethereum's down 10% is from the actual issues and people getting flushed out with leverage, and some of it is just due to fear. I think we probably will get through this and it won't be like Luna, but there are going to be some liquidations. There are going to be some people flushed out. We've seen now for a couple days, Ethereum has led the pack in liquidations. So right now, all we can do is wait. It's going to be interesting to see what happens. Let me know your thoughts on this underneath the video. I have some money on the sidelines and I wouldn't mind buying some more Ethereum, but I'm going to wait a little bit because I continue to think Bitcoin's dominance is going to continue to rise. Now, let me know your thoughts. Also, check out the link underneath the video to FTX US, and I'll see you in the next one. Bye.